Hi, my name is Stuart Barron. I'm National Director of Research for Cushman & Wakefield. It's a pleasure to be here and consider tomorrow's real estate markets across Canada as we look towards 2017. If I was to pick a single word to capture the essence of last year, it would be one of fragmentation. Markets across Canada were either buoyed by strength or had fundamental weakness, all driven by the fall in oil prices that began in mid-2014. All of that's going to begin to be subdued as we move towards 2017. If I was going to pick a single sector where the fundamentals are the strongest across Canadian markets, it would be the industrial sector across Canada. If you look at the key markets that are showing the most profound growth, Toronto, Vancouver, Montreal, we're really seeing a tremendous expansionary momentum in the marketplace. In addition, if you look at Toronto, vacancy rate 3.5% in an 800 million square foot market, that market is hot. Alongside it, Vancouver, 2.5% vacancy. Both of those markets are rock and roll hot from an expansionary growth perspective. When you layer on top of that the economic fundamentals, including the low interest rate environment, the low value of the Canadian dollar, we're going to continue to drive out expansionary growth. On top of that, the change in the U.S. administration, which is going to buoy demand from industrial markets south of the border, is also going to connect inside Canada and help drive growth. What are the implications? We're going to see rising rental rates in the Toronto market and in the Vancouver industrial markets looking forward over the next couple of years. Additionally, not only is that going to improve the financial side from an asset management perspective, but you're going to have to engage sooner if you want to find the needs met for your own organization as you tap into the available space in these very tight markets. Now, the second issue we're going to address today, if you were going to build in a downtown market across Canada, where would you put up a new office tower? The answer, in this order, is likely downtown Toronto, downtown Vancouver, and downtown Montreal. Fundamentals in Toronto and Vancouver from an office perspective in the downtown markets are extremely hot. Toronto has seen over 2.7 million square feet of positive growth since the oil price decline began. In addition to that, we're now beginning to see upward pressure on rental rates in the downtown market. That will drive the fundamentals for new development. Vancouver, similarly, 1.2 million square feet of positive growth since the oil price decline began. Their vacancy rate now only 5.5%, alongside Toronto's at 4.0%, makes them great candidates for development activity tomorrow. So my bet, 2 developments will be announced over the next 12 months in downtown Toronto, bringing between 2 million and 2.5 million square feet of new development to market in the year 2021. Approximately. In Vancouver, we're likely to see 1 new announcement bringing between 300 and 550,000 square feet to market in the kind of 2020-21 time range. Those are my predictions for 2017. Thanks for joining us for this quarter's Cushman & Wakefield Market Watch.